Hello everyone, welcome to this video. This is just another one. We're going to look at the pound against the US dollar this time. I called the short previously. You can see it started to fall and you took some early gains as per what I put out. So again, as always, we start on the monthly time frame. We get the overall picture. Okay, so we can see we landed right down here from a severe slew of red candles since June 21. Fell down, got our candlewick, price rejection brings us up here as the market sentiment shifts slightly. Now, we're not out of the woods. Economies are bad around the world still, things aren't over, but it is slightly better. Now, why did we fall away? Well, you need to just open your eyes a little bit to what you can infer from a price chart. Trading, all about inference. You need to know where buyers and sellers are moving in and out of the market. And that's the point of this video. You can see that right here, guys. You can see an example of it. We come into this resistance and we push away. It's not an accident. It's not a surprise. We were looking short because we've had that massive move up, hit some early moving averages and bounced away slightly. Now we know, and we're fully aware because we don't trade blind. We know what's going on in the world. We know about the market sentiment. We know, okay, there is still dollar weakness. And we're not looking for a massive immediate fall because we've got price action levels to break through anyway. And that's where we're resting at the moment. So you can see that right here. And that's why we dropped down on our lower time frames and exited early. And you can see there isn't a forceful push downwards. And we expected it because of the market sentiment. So we knew where to exit our shorts nice and early. Okay, and we can slowly move into light longs once we get a lower, more feasible price on the dip to trade the move upwards. So remember, guys, when you're trading in the markets, you need to look to infer what's going on, take price action levels, okay, and just be aware of what's going on in the world. Be aware of that market sentiment because that is going to depend, really, that's going to vary how far your trades fall and how far into any level that you push. Okay, and that's really important because that will allow you to vary your risk, vary your capital, and make much better decisions. There's no point in ignoring the news. The news moves the market over time, and really those inference points that you can find on a chart are sort of the technical aspects that you'll need to be looking for. So market is moved by people buying and selling, and you can see that on a chart with those technical aspects. So take note of the news. Look back on the market, use market memory, and find that trader's inference. Now, in the future, we're only going to look lightly short higher up. And as I say, if we get a reasonable dip, we can continue with that market sentiment changing, and we can get a reasonable deal in the grand scheme of things for a long side trade to continue to the upside. So that's really it, guys. Thanks for watching. I'll see you in the next one.